Hello, everyone. Today on the final bar, I'm joined by technical analyst Bruce Powers, joining us on the show again, sharing a couple stocks top of mind for him. Plenty of news flow this week, and continuing on today, we have the Robinhood IPO to grapple with. We have a lot of companies reporting earnings this morning before the open. Also, stocks like Amazon, which you may be familiar with, reporting as we record the show. So we'll update as much as we can as we go and focus on the charts. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the final bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Redmond, Washington. Thanks for joining us every weekday after the close as we focus on the markets themselves using charts, using the power of stock charts to understand investor sentiment, looking at indicators of price and breadth and sentiment and trend and momentum, all those indicators that help us make sense of what's working and what's not, increase our situational awareness for the markets, if you will, our market awareness, and understand where the opportunities may lie. You know, the S&P continuing to push higher today, going up 0.4%, closing just below 4420. So continuing to go higher. And as I've been reminded before, the most bullish thing the market can do is go up. And so we continue to see upside in stocks. We continue to see upside for the S&P and the NASDAQ until proven otherwise. The trend is positive. The question, as always, then, is how do you play that, right? And I would say at most times you will hear me suggest you focus in on trends. You lean into what's working. You lean away from what's not working. We're seeing some things emerge. We'll talk about things like home builders and others. And a little later in our bottom line segment, we'll focus on a lot of the earnings releases coming out so far this week. We have great guests on the show. I'm super thankful and appreciative that so many people like Bruce Powers and others give us some time to help us make sense of the investment world. Next week, we have a couple great guests to highlight for you, actually, the next 2 weeks. Next Tuesday, on August 3rd, we have Andrew Thrasher from Thrasher Analytics. On Thursday, August 5th, Mark Chaikin of Chaikin Analytics is going to be coming on the show. Week after that, on August 10th, we have Gary Dean from SentimentTiming.com. On Wednesday, the 11th, Samantha Leduc from Leduc Trading joining the show once again. So great interviews. Hopefully, as always, it's such a pleasure to pick some of these traders and investors' brains and get a sense of where they're seeing. As a reminder, all of our previous interviews are all on StockCharts TV on demand. Just go to StockChartsTV.com. Let's continue on with our market recap. As I mentioned, the S&P just happens to be making a new all-time high yet again, continuing to elevate this trend and push onward and ever upward. A lot of the conditions we've talked about in previous days and really in previous weeks, if not months, are still very much in place. You still have this bearish divergence in play, particularly with momentum and with breadth. That hasn't changed based on today's trading alone. And again, the concern there is, and I tweeted earlier on, this basic sentiment, which was I can't be too bullish given all of the bearish divergences. I can't be too bearish given the fact that the market continues to push high and stocks are continuing to break out. We're sort of in this middle ground where things are working, but the conditions don't seem as clearly positive as they could have been. We'll try to tease out as much of those inputs as we can. Let's recap just very quickly what else happened today, though. The mid caps and small caps both up 1% plus, with the small cap index actually leading the way higher. This was a lot of the cyclical sectors were up a good amount, with materials, financials, energy, industrials all outperforming the S&P today. Looking at fixed income markets, bond yields back higher today. 10-year yield was chopping around quite a bit, but settled in around 127. The TLT, as we usually use for our bond proxy, down about 0.5%. The dollar index down about 1/3%. Precious metals pushing their way higher. Really, commodities as a whole were relatively strong today. The GLD was up over 1%, silver up 2.33%, continuing to show signs of strength. Sort of mixed messages overall from cryptocurrencies, with Bitcoin really spending the last 2 trading days chopping around really at 40,000 level. Sort of gotten up to 40,000, has attempted a number of times to break above there and sort of continue this exceptional rally that occurred over the last week, but has stalled now and sort of settling in here. It's almost hitting an equilibrium price is how I would describe it, sort of a consolidation phase. And the question is, what's next, right? Do buyers or sellers take control and push this into new territory one way or the other? Looking at a chart of the S&P 500, so here's where we're at, just refreshing here for the closing data. So not quite a new closing high. We eclipsed that a couple days ago. I think that was Monday's session where we made a higher close, but overall we did make an intraday high, closed above the open. So after yesterday's doji candle, which is where the open and close are right about at the same level, often serves as a bit of a short-term reversal signal. The market bouncing back higher today after Tuesday's bit of a pullback, bouncing back higher, closing just below 44.20. So most of this, I would argue, still in play. I was actually asked, and we'll probably talk a little bit more about this tomorrow during our mailbag segment, because we've had a great question about this trend line. This is a trend line we've been watching for quite a while. I think it's still important. This is the October low, the March low. We've tested that so many times. What's happened, though, is it's less and less of a beautiful representation of this trend because we've broken down through it a number of times, right? So we've literally closed almost right at that line, depending on where exactly you draw it, taking the previous low. So while I think it still represents the direction of the trend overall, the fact that it's broken a number of times makes me feel a little less, makes it feel a little less meaningful to me. For me, it's more about the 50-day moving average. That's what's held pretty much every time, right? We've closed below the 50-day twice. We've traded it below it a number of times, and literally every time we've gone back above it the next day. So that has served as a beautiful lagging indicator of this uptrend. We talked about the breadth divergences. Tomorrow on our weekly wrap show, we'll go through the Mindful Investor Live chart list and dig into some of the signals in terms of breadth and sentiment. But I highlighted the divergences that we see at the bottom of the chart here. We've had 3 now bearish momentum divergences, one in January, one in April, arguably one now. I think you could make the debate as to whether this next peak is in and whether this counts as a bearish divergence, only because we're starting to rally a little bit. And if we keep making new highs, that can push the momentum right out of it. It doesn't end up looking as much as a bearish divergence. But at this point, certainly seems to look similar to those previous topping patterns. Those last 2 times we pulled back around 4 to 5%. So it was not an end of the world sort of pullback, but it did get us back to the 50-day moving average. And that might be something to look for here going forward. Having said that, you're not getting distribution on days like today. And I would also argue you're seeing some stocks that are starting to improve. Let's talk about the sectors here very quickly, and then we'll look at some of the charts that are breaking out a little bit. Sector-wise, it's sort of jumping around here as we're locking in the closing data, but materials and consumer discretionary sort of right on top of each other, leading the market higher, followed very closely by financials and energy. After that, on the downside, you had communication services, we have real estate, we have healthcare. We're going to talk about some of the earnings names a little later. We have that segment called the bottom line, but I just want to highlight a couple groups that kind of came to mind here as I was looking at the big movers today. I saw that one of the biggest gainers was the home construction group. That's the XHB and the ITB are 2 of the ETFs that come to mind. Similar exposure, just a little different. ITB is a little more of a pure play on home builders, stocks like Pulte and Lennar and DR Horton, whereas the XHB has a little more like Home Depot and home improvement stores that are sort of grouped in there as well. So it's a little different, but very similar exposure. And what's interesting on this chart is talk about something that's rotated from a distribution period to more of an accumulation period. This is a stock that comes down. This is an ETF here. It rallied to $80, came back down to 70, bounced off of that a number of times. Now has reverted back above the 50-day moving average, broken above the swing high from the end of June. Today, kind of pushing back above the 75 level. I think holding that is pretty key. Certainly indicates a high probability of a return back to 80. And the reason why that looks so good, by the way, are charts like Lennar and others, which look even better, right? Lennar's actually broken above its 50-day, put in a higher low. So the concern with this, right about here, this looked like a really negative group all of a sudden. This is a group that had just made new all-time highs in May. And all of a sudden it's breaking down. You're seeing lower highs, lower lows, failing at the 50-day moving average, testing it from below and continuing lower. That's sort of a negative pattern overall. Now all of a sudden you have reversal breaking above the 50-day. You're putting in a higher low. You're not putting in a higher high. So the challenge with these charts is they're right up against those pretty significant highs from earlier this year, sort of in the springtime. If it can eclipse that, if something like Lennar can get above 110, I think that measures a lot higher from here. That's a big if, though. And the good news about a chart like this is if you would pull back, you have a pretty clear risk assessment. If you look at the swing low in June, that's the 200-day moving average right around 89 to 90. They're all sort of grouping in that same level. So I think that's your downside potential, but with pretty decent upside, giving a group that's improving. It's interesting when you look at some of the consumer groups, when you look at things like healthcare, when you look at things like technology, I am not struggling to find stocks making new swing highs. I would argue they are plenty and abounding. So could be plenty of opportunities to pay attention to. We need to take a quick break. We'll be back with my guest, Bruce Powers. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. It's so good to have you join us every weekday after the close for our show. Thank you so much for supporting us, supporting StockCharts TV. It's a pleasure to have you along this ride with us. A couple quick announcements before we get to my guest, Bruce Powers. First off, if you have questions that come up as you're using StockCharts, as you're analyzing your own charts, as you're watching financial media or anything else, let us know what we can do to help point you in the right direction. Anything about the markets, market history, technical analysis, investor sentiment, breadth, whatever it is, we are happy to answer your questions. 3 ways to get your questions to us. First off, via email, thefinalbar@stockcharts.com. Second, on Twitter @finalbarsctv. Finally, on YouTube, just go to the Stock Charts channel, bring up one of our videos and put a comment right below that video. We will capture all those questions and we'll hope to answer one of your questions on our next mailbag segment on Friday's show. Also, go to StockChartsTV.com, use your email address, set up a free account. You can start watching all of our fantastic content on demand from any of your mobile devices, as well as our website. Fantastic guests like Bruce Powers and many other special events like The Pitch and Charting the Second Half, which we just wrapped in the last couple of weeks, and so much more, all for free on StockChartsTV.com, or just search on any of the app stores for StockCharts TV on demand. I want to welcome on today's guest, Bruce Powers. Bruce is a technical analyst and independent trader coming to us from New England. Bruce, welcome back to the show. Good to have you back.
Hi, David. Good to be back. Thank you.
So the market, obviously, in a period of uncertainty. However, the uncertainty appears to keep resolving to the upside. The S&P continuing to chip away and make new highs. You brought 2 stocks that are top of mind for you. Start us with Carnival. What are you seeing here?
Well, I've got the reason I'm bringing up Carnival because I thought it'd be interesting to talk about how when we have a sector-wide sell-off or a theme sell-off, in this case, a reopening, and we get these really sharp, high volatility sell-offs. And some of the things we can look at to try to get in some of those bounces because they turn into very tradable bounces. So if we look at Carnival here, we see a few things that got my attention initially. One is we have very high volume, showing potential exhaustion of sellers. All the sellers that were going to get out within this drop are likely gone, and now the buyers can start winning the day again. And we also have very oversold conditions in the 14-period RSI. And then we have a doji candle at the very bottom at the 88.6% Fibonacci retracement. So we have a number of different pieces of evidence to support a potential bounce there. The trigger would be a breakout above that bottom day high with an initial stop below that day high. Of course, you'd have to look at the risk reward, but in general, that would be an approach. That's one part of it. The second part of it is usually we'll get a second entry, which I'm going to look at in the next chart, but I want to point out something in this one here. So second entry could be, in this chart here, a new high above the last 6 days, because we have that 6-day high pretty well defined. And we also have not yet reached our minimal Fibonacci retracement, 38%. So one way to get into these sharp sell-off stocks is off the bottom. The second way is a secondary enter higher up. And I have a better example of that on the next chart with PSX.
Perfect. So now here we have energy.
Exactly. So we had a similar situation with energy. We had a sharp sell-off across the board. And I should mention, what's important here too is that pretty much all the stocks in the sector were selling off in both of these cases. So you have a lot of, everybody's on board in the same direction. So it gives you a little bit more high probability that when you do flip, it'll keep going, it has a chance to keep going. So in this case, we did see exhaustion again with the high volume, see the oversold with the RSI. We almost reached the 88% Fibonacci retracement, which is not significant unto itself other than it's a Fibonacci level. But in this case, I don't really like a bottom entry, but I do like the secondary entry after the first pullback, right there, where we have a doji candle inside bar. So that's a sign of contraction, consolidation. What comes after contraction, consolidation? Hopefully some burst of price. And that's exactly what we saw here for a continuation of that uptrend that is still has a way to go, I believe.
It's interesting. You picked two stocks and two groups that have certainly felt some pain here in the short term. Where we're not seeing a lot of pain, Bruce, just to finish up, is a lot of the FAANG stocks, right? You've had the market continue to go higher, the NASDAQ continue to push higher. We just had Facebook's earnings this week. Microsoft, Alphabet, Apple, and we're getting Amazon here after the close. With that group of names, which have been sort of the leadership as stocks like Carnival and PSX and others have been struggling, a lot of people obviously have been rotating to the relative, I guess, the relative defense or the relative, safety of something like the FAANG stock. Do you see those as opportunistic here, given the instability, the uncertainty that we're in, or is it a chance to rotate away from some of those stocks that have already locked in plenty of gains and rotate maybe into something like a CCL, which is a little more beaten down here?
No, I see it just a way to kind of mix up how you're approaching the market, the type of trades and positions you might have. So we have a bit of a correction in these two stocks and in the sectors. Carnival was down 39% from the high at that bottom, and PSX was down as much as 26%. So we have these internal corrections that are going within the sector, while still the tech leads and the FAANG stocks are very strong, and there's still plenty of opportunities in those areas as well.
When you're looking, and we have about 30 seconds left, Bruce, when you're looking at the overall market, we have a chart of the S&P 500 up here. And again, we've had this situation where the market's just continuing to pound higher. We've had minimal pullbacks to the 50-day moving average, but overall resolving to the upside. We've had some, pieces of evidence that some have suggested are a little less optimistic, like breadth that's come off a bit, small caps not participating. Overall, do you see this market in a fairly constructive manner? Are you looking for upside opportunities, or is it more the time to be thinking defensive as the market has had an exceptional run so far?
No, look, the trend is clear, and I think we have to stay with the trend until we see something else change. And so far, we only see that in a very short period of time. And the rebound and from corrections, the minimal corrections that we have had been very rapid, very aggressive, and very convincing. So clearly the buyers are still there.
The trend is clear. That was a great quote, Bruce, and we'll have to leave it there. Bruce Powers, thanks so much for joining us today. Stay safe, be well. We'll talk to you again soon.
Thanks, David.
That's Bruce Powers. Bruce is a technical analyst and an independent trader coming to us from New England. Does a great job. I think I love his last point, which is, look, the trend is clear. It's going up. We've had minimal pullbacks, but they've resolved to the upside. And we have spoken in many different ways trying to tease that out, right? In general, follow the trend. When in doubt, follow the trend in the markets. If you've seen anything from weeks and months like we've seen recently, it's the market continues to go upwards until proven otherwise. And that's what we've not necessarily seen from the major averages yet. Great take from Bruce Powers there. Let's continue on with our next segment called the bottom line. So, plenty of stocks reporting earnings. Sometimes, I look at the companies listed or reporting earnings during the course of the week, and it feels like limited excitement. I feel like my cup runneth over. I was mentioning to our producer, I stopped writing tickers down because it was just my page was full of names that I wanted to follow and just see how they were coming out. So we just wanted to highlight very quickly, starting with Amazon, which is the last of the the 5 FAANG stocks all reporting this week, or FAANG stocks, I guess, if you want to group Microsoft and others in there. So Amazon coming off certainly has sold off a bit leading up to the announcement. Let's look very quickly at the simple summary page. So if you're at a chart, at the very bottom, there's a link that says symbol summary. If you ever want to see after hours trading on a stock, this is the place to do it. We indicate whether something's reporting earnings. We give you the a listed close or the consolidated tapes, a normal trading session close, and then we'll show you what's happened afterwards. So Amazon's certainly getting beaten down in the aftermarket here, down about 5%. This is around 34.20. So if we go back to the chart of Amazon, 34.20 is putting us right below the 50-day moving average, actually. Now, again, this is where it's trading after hours. We'll see what happens going forward. But when I'm looking at the chart of Amazon, this is sort of my go-to chart that I've been thinking about, which is this, right? This is a breakout. This is a big base breakout, which is what we would call it, which is a stock that had a good run, then sort of settled into this range, a 10-month basing pattern, and a base is basically a consistent resistance level, sort of this rounding bottom or consistent bottoming price. And then after consolidating in that base for a while, you break out. You break out of the base to the upside, which is called a big base breakout. Very classically retested the breakout level from above, which is around 3,500. Those are the highs from September of last year, October of last year, again in April. Tested it in June, broke out in early July, now tested it from above, bouncing up. And so, this is setting up for this beautiful high percentage play to go higher. An earnings miss, though, or whatever. And again, I've not looked at the details of the earnings report just yet. But so far in the after hours, investors not impressed with what they heard. And currently, it's actually trading back below here. So one of the concerns we talked about for this market are these mega cap stocks that have been breaking out. And what if they are unable to keep those breakouts, unable to follow through to the upside, unable to draw more buyers in, and instead you have what are called failed breakouts. A lot of times some of the more bearish indications you can get from a market is when charts that normally should work beautifully and be high percentage rallies from there, when they fail. And failed breakouts, when you attempt to break out and are not able to do it, a lot of times can be very much a bit of a concern. Apple, by the way, that is not the chart I wanted. This was the one that I wanted. Apple, by the way, is in a similar sort of thing. Now, it's not come back down to that breakout level, or it's not broken much below it, but it has failed to follow through, right? So you had this symmetrical triangle pattern similar to what you saw last fall on Apple. Now this broke out to the upside and had a nice run June into July. From there, though, that's been it. And we hit a peak around 150 and have not been able to really follow through to the upside. So here, two of the FAANG stocks really struggling to follow through after having pretty good breakouts. Last one we'll leave it with here in terms of the FAANGs is Facebook. Now, Facebook, a little different. It sort of looks like Amazon, if Amazon just continued to break out to the upside, right? So Facebook is maybe 2 months, 3 months further along the uptrend. If you look at this big base here, it's very similar to the base you had in Amazon. The breakout and the retest, very similar. Facebook indeed bounced off that a number of times before really pushing high over the last couple months, which has allowed it to outperform fairly handily. But this coming off today, Facebook down about 4% after reporting after the close yesterday. It was trading down in the after hours and really followed through today. So, if there's a concern right now, it's some of the mega cap, tech communications names that could have really seen a big catalyst for further upside and followed through to the upside. You've seen it with some of them. So, Google may be one of the outliers that actually, broke out just fine today. And by the way, I was actually got a comment on this. I was mentioning Google and how it really didn't react so well. We have to remember that Google actually has two different share classes, and this is going a little bit off script, but I think it's an important thing to keep in mind. We're going to look at the last 3 months. If you know Google very well, and if not, I'll share with you, they have a couple different share classes. They have the Class A shares, which is GOOGL. These are the shares that have a vote and are sort of the normal things you would think about as a common stock. Then they have the B shares, which are not listed. Those are the ones that the insiders hold, the management team, a small number of directors hold. And then you have the Class C shares, which are GOOG. So this is GOOGL, the Class A shares. You can see the nice bounce higher on yesterday's session and sort of similar to where we were today. These are the Class C shares, and you can see it's actually a bearish engulfing pattern. We did not break out yesterday. We actually closed down on the day. Those two classes, more often than not, are almost identical. You can use either one interchangeably, but recently there's been a bit of a disconnect. It's because the Class A share trades at a bit of a premium to the Class C share, and so it's actually a little bit of a divergence recently. So it's worth noting, depending on which Google ticker you would bring up or which Alphabet ticker you bring up, you get a very different picture of the stock. I think in general, if I was going to use one, I actually use them interchangeably. I'm going to start using GOOGL more consistently because that's the main share I think most people would get. That's the voting share that most people would probably be more likely to add to a portfolio. So that's one we'll look at for now. So what's interesting is you had the gap higher yesterday, a doji candle with the open and close right about at the same level. We're actually pulling off a bit here today. So while the FAANG stocks are all very close to all-time highs, I would say almost all of them are coming off of it and not really following through to the upside, at least so far this week. And that could be a bit of a concern. You know, as we've talked about many times, I think your challenges are threefold. Number one, identify trends. Number two, follow those trends. Number three, anticipate when those trends may be exhausted. And I think that's something I would be looking for. Finally, there's one other name I was going to do. Yeah. So we actually had payment processors mentioned. We did the pitch earlier this week, and if you missed it, go to StockCharts TV on demand or go to our YouTube channel. It was a fantastic discussion with Mark Newton, Jeff Hughes, and Greg Schnell. We had a lot of fun talking about stock ideas right now. All of them keyed in on the payment processors. One of them recommended, I forget who it was, recommended or was suggesting highlighting MasterCard. MasterCard up 1.4%, actually reported before the open today. So actually holding up pretty well, but it really hasn't broken out yet. I think you're looking for a break above 400, which would get above the April high. PayPal is a tough one. It's actually getting hurt today pretty good. Down 6.2%. They reported after the close yesterday and not really following through to the upside. So, you know, the key resistance in February around 310, right back up to that level at 310 a couple of days ago. This is on Monday. From there, it's come off, now testing the 50-day moving average. So the concern is, what's your risk appetite? Are you comfortable owning this if it starts breaking below its 50-day, aiming down toward previous lows, maybe the 200-day around 250, but overall not quite able to break out just yet. So again, I think with some of these growthy areas, the concern is, are they breaking out and following through? Today, when I'm looking at the evidence, as broadly speaking, I'd say the answer is no, but we'll have to see how the rest of the week and beyond plays out. We need to wrap the show today. Go to the 3 and 3 charts in 3 minutes. Here we go. Robinhood. I didn't bring it up the whole show, but I have to go there because it's the IPO day. I was asked a lot about this in financial media today, and here's what I would say. You know, in general, the listed price or the indicative price was right at 38. It's at the lower end of the range. Opened there, traded above it briefly, but from there that served as the ceiling so far, and it's distributed. You know, some IPOs obviously come out and just rocket to the upside. That is not the case here. Robinhood has a lot of challenges, and it's a crowded space with brokerages. And the question is, how much can they differentiate, change the game, continue to grow their business, build on the momentum of cryptocurrency trading and the coronavirus effect, and so many new traders joining the market. From a technical perspective, I think there's very limited you can say until you get more data, right? Charts are based on data, and until you get enough price data, it's hard to really read sentiment. But I am very keyed in on the short term about where we are relative to that listed level at 38, which is the blue dotted area. So far, we have not really moved above there, and I think that's a key level to watch. Chart number 2, Amazon. So Amazon reporting after the close today. Our segment, the bottom line, we try to hit on just a couple of the names. There's so many, and I'd encourage you to go through earnings this week and see what you can learn from the trading leading up to the announcement, trading after the announcement. Amazon coming off in the after hours back down just below the 50-day moving average. We'll have to see what comes out tomorrow, but I think Amazon is a risk of being what could be the example stock of this market, a bull market that potentially does not have the follow through from the growthy stuff that's been leadership here in recent weeks. Finally, the TLT bond prices, right? Bond prices overall have been trending higher. They've pulled back a little bit as rates have hopped up a bit. But overall, this chart going higher, interest rates going down, should be a tailwind for growth stocks, not a headwind for it. So we'll see how those narratives all combine. Folks, that is our show for today. Special thank you to Bruce Powers joining us from New England, sharing his thoughts on a couple key names. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.